As we age, the cost of care can skyrocket, especially for extended care at home or in a facility, commonly known as long-term care. This week, we'll explore how to plan for these potential expenses and discuss the pros and cons of long-term care insurance on today's Money Minutes. Hi, I'm Mike McMeans, president of SilverLink Financial. Welcome back to Money Minutes. I help lots of people plan for the potential increased care costs of getting older. And the one that can cost the most is extended care at a home or in a facility, popularly referred to as long-term care. Insurance exists for these potential expenses, but many are very skeptical that these policies will even pay. And quite frankly, I understand why. There have been several insurance companies that didn't service well the policies they sold when these policies first arrived on the scene in the 1980s. They assumed a certain number of folks would drop their policies. Those companies assumed this because that is what they had experienced with other kinds of policies, that a certain percentage of people would just stop paying and let their policies lapse. Well, there was one problem with that. They didn't. The insurance industry grossly overestimated the number of folks who would let them go. That, combined with costs that went up a lot faster than the insurance industry expected, created a perfect storm, where insurance companies got very particular about what it took for someone to be able to turn on their benefits. That was in the 1980s and 90s, but today insurance companies know what to expect, and the policies are very specific about what it takes to turn on the income benefit. Some insurance providers even offer services to help policyholders find in-home help. The fact is that an average cost for nursing care in the state of Ohio is $224 a day, but that is average. No one wants average. I have found that the kind of care people actually want can start to approach $300 a day or about $9,000 a month, and that's really kind of the lower end. That said, it doesn't have to be an unreasonable cost. Many tell me that they don't think it will happen to them and they'll just self-insure. That's an option. But to those people, I would say that even Warren Buffett has an extended care policy because the economics of one are just too good. The policies either pay a death benefit or a care benefit. So in just about every case, people at least get their money back, or their estate does. The older notion that it is like car insurance and you either use it or lose it often simply is no longer the case. The variety of types of policies you can get are many. So you need to spend time to evaluate which one is right for you. If you'd like to do that, please let us know. We'd be happy to help. One final thought, guess who gets the best care in an extended care facility? The person with the most visitors. It's sad, but it's true. So if you end up having a family member who just can't manage being at home anymore, be sure to visit. It's the single best thing you can do for their health and to make sure that they get the attention and care that they need. Feel free to leave your comments below, and feel free to follow us on social media or connect with us on our website. I'm Mike McMeans, president of SilverLink Financial, and thank you for watching. I recently saw a reporter interviewing a 104-year-old woman. The reporter asked, "What's the best thing about being 104?" She said, "No peer pressure." We'll see you next time.